reality. We're wonderful protestations rather than what people actually do. But this communique is about the protestations. It's about the messaging, as Annalena Baerbock said yesterday. Why don't you talk us through the problems with this statement, or actually what is good about this statement?
Sure. Okay, good morning to you. Well, here it is, Steve. Hot off the press this morning. This is the latest draft text from the COP28 presidency, and we are already seeing the reaction coming in thick and fast here. The negotiators were working on this until about 3 o'clock this morning, we're told. So let's go through what's new, what stays the same, and what perhaps might still need to change here. So in the original draft text, with regards to fossil fuels, which is only mentioned once, they say, quote, reducing both consumption and production of fossil fuels in a just, orderly, and equitable manner so as to achieve net zero by, before, or around 2050 in keeping with the science. That has now been updated to transitioning away from fossil fuels in energy systems in a just, orderly, and equitable manner, accelerating action in this critical decade so as to achieve net zero by 2050 in keeping with the science. So what's changed here? We now see in this text a reference to transitioning away from all fossil fuels. That's still a significant step forward, but remember, it's not phase out and it's not phase down, which is only likely to stoke anger among those stakeholders who wanted stronger language and higher ambition from this COP. What we have seen, though, is this new text in its current form basically going above what COP26 agreed as well, which was a transitioning towards low emissions energy systems. It's the first time, remember as well, that we have actually seen reducing fossil fuels being mentioned in a UN climate treaty. We haven't seen this in 2 decades of conversations. So what they are trying to agree around here with regarding to the verbiage and the wording on fossil fuels is new territory for them, which is why we've seen these talks go into over time. What we've also seen in the new text is this new wording strengthening the mitigation aspect. So the wording has moved from could include to the more active calls upon parties to. So, we're really getting into the weeds here, but basically what it does is move the language from could to should, and that'll be seen as a positive. What this new text does as well is take a significant step forward for the next round of NDCs. They're the nationally determined contributions. It basically encourages parties to set what it calls ambitious economy-wide emission reduction targets. Again, that raises the ambition. What's interesting for me, though, in this latest text is the wording around coal as well. There was some hope in the original document that we would see phase out aligned with coal, but that wording has now changed to accelerating efforts towards the phase down of unabated coal power. Again, there's no phase out when it comes to coal. So what we're seeing here is this COP presidency in the UAE really trying to deliver a text that has the support of all parties. And I would contend that given just how late the negotiations went into here in Dubai, into the early hours of this morning, that there's still a little bit of work to do here.
Yeah, and brilliant coverage, and thank you for that analysis. And I'll just say one thing, it's a text, it's not an internationally binding treaty. And that's where my skepticism comes in, ladies and gentlemen. We'll come to this in many, many hours of programming later today. In the meantime, one of the best performing retailers on the planet, the biggest retailer on the planet, has some news for us.
Yeah, looking at Inditex, I've got to say, some irony here, really good at the internet that they offer for their fashion shopping customers. Not great for investors, though, the website with the reports and the results for their website. That part is a bit of a weak arm, I've got to say, versus what you see for the actual product. But anyway, we've got numbers crossing today. And don't forget, this is a company that's done particularly well, although price increases were starting to slow in the last quarter. Now, we've got the 9 months crossing store and online sales in constant currency between the 1st of November to the 11th of December. So some seasonals here increased double digits. We're 14% up versus the same period in 2022. 9-month net profit, 4.1 billion euros versus 3.1 billion same time a year ago. So a step up here. At current exchange rates, it expects a minus 4% currency impact on sales in the full year 2023. The company's talking about net sales at 25.61 billion euros versus 23.06 billion same time a year ago. So that number, again, it is a higher number than the same time a year ago. In terms of some of the other points we're getting here, based on current information in full year 23, it expects growth margin of around 75 basis points higher than full year 2022. Again, a nod to the increases in prices that it's seen so far this year. 9-month gross margin 59.4%. Expects ordinary capital expenditure of around 1.6 billion euros for the full year. So just a couple of points here. And growth of gross space in 2023 will be around 3%. This is a business that has been in particular trying to target the United States market, which is interesting because don't forget Shein is also going after that market. And you do wonder whether they're completely different categories or does a lower priced fast fashion option that's very quick to market upend the likes of Zara?
I'm just going to say one thing. The thing that blew my mind in these numbers, and again, in this environment, is the gross margin at 59.4% as well. The gross margin average over the previous